Jim Breyer has invested in many, many successful companies, but at the top of the list will be Facebook. And Hugo Shong has invested in a few successful Chinese technology companies. I'm going to name a few: Tencent, Baidu, Xiaomi, Meituan, CreditEase, Ctrip. Hugo, what did you not invest in that has been successful in China?
I think you should have mentioned the other companies, SenseTime and Xiaopeng Car, was here.
Yes.
Okay.
Yes.
Other company, yeah.
Those are not multi-billion-dollar successes yet, the way the others were.
I keep telling people the biggest failure for me, missing opportunity in China, missed Alibaba.
Uh-huh.
That's
and
right.
why did you miss Alibaba?
Okay, maybe that time I didn't meet with Jack Ma. Okay, that's right.
So the lesson there, young people, is take the meeting when you have the opportunity, right?
Also, fund size is too small as well.
Your fund size at the time. Okay.
That's right, yeah.
Hugo, start us off, please, by explaining to everybody in the room why you and Jim are sitting here together.
Maybe it's better you ask Jim then.
I'm happy
why we're here. That's
But
right.
first, we'll hear from Hugo,
Okay.
my friend and partner.
Yeah. Yeah, Jim told me I should be here, so I came over here. But then that's very simple. Yeah.
What I'm asking is, and Jim, I'll ask you if you wouldn't mind kicking it off. You two are longtime business partners.
Yeah.
Explain what you do together, if you would.
Okay, yes. Let's put it this way. I met with Jim personally in Beijing 2004. That time, Jim was on the board of Walmart. They had a Walmart board meeting in Shenzhen. And at that time, Jim also was the chairman of the NVCA, National Venture Capital Association in the US. That time, I happened to be the chairman of the CVCA, the China Venture Capital Association. So I invited him to Beijing. We had a nice meeting and a dinner, of course, and that's how really we got started. But the one thing you didn't know that why we can get, of course I know, Jim is doing really well, etc. But Jim know me as well. Why? Because when I started IDG's China's first venture capital firm in China in 1992, and I have a very good, distinguished, well-experienced investor as my board director on my board. That's Jim's father, John Breyer.
Oh, wow.
That's right. So I'm familiar with the Breyer family. So now I'm working with 2 generations of the family. That's the one business. But then actually, so John on my board, came on my board in 1993. I actually met with Jim 2004. So yeah.
Now, you've spent most of your career focused on Silicon Valley, but you've invested in China. You've spent your career focused on China with U.S. partners like Jim now. Mm-hmm. Jim, you told me a story a moment ago that I would like you to share with everybody about the first time you attended a Fortune conference and the question you were asked, because there's a China angle to this.
There is. It was the first Fortune Brainstorm.
The conference I thought we were at.
Aspen, Colorado.
Yeah.
And on stage, I was asked if I could buy one stock in the world, which stock would I buy? And Tencent was the pick.
This would have been about what? The year
2010.
Okay, uh-huh.
And we had invested IDG in Tencent early, but at that point, the Chinese internet stocks were deeply undervalued.
Yeah.
And it's fun to reminisce. I've been at it a while, and I've believed, and I will offer a thought today, 10 years from now, and I had a wonderful conversation with Alan Murray a couple of years ago in Davos. 10 years from now, the AI-enabled companies will be far more valuable than the current FANG and BAT stocks as a group. So there will be 18 to 20 companies, many of which I believe will be trillion-dollar market cap companies 10 years from now. 18 of the 20, I believe, will be in the US and China, and many, including some of the FANG stocks, will be enabled by artificial intelligence as a core platform. I'm 2 years into this investment thesis, and that's my very significant bet going forward.
You're saying that this basket of stocks, and there'll be stocks at the time, there'll be stocks 10 years from now, will be more valuable than the combined valuation of the FANG and the BAT stocks today, which is in the several trillion dollars today.
By at least 2x. And in each of those companies, AI, and many of the FANG and BAT stocks are certainly leaders in terms of talent, and I compete like crazy every day to attract talent, whether it's for some of our Beijing-based companies or a Palo Alto-based company where it's Google, Facebook, Amazon, Apple, all competing like crazy versus the startups. But that's why I'm very optimistic long term. I also believe there are fields, and we've heard a lot about it at this conference, where AI as an interdisciplinary function with medicine and health will be a market opportunity to generate companies that will be worth trillions of dollars 10 years from now. Partly because the interdisciplinary nature of getting chemists, biologists, machine learning PhDs to work together as a team is really, really hard.
So I want to get to ask you what an artificial intelligence company is. But before I do that, give us one concrete example of a company you're invested in now that, if you're right, if it's successful, will be one of these 18 to 20 companies 10 years from now.
Well, there are a couple in the healthcare AI
Okay, tell
area.
us.
One is a company, a spin out of Memorial Sloan Kettering called Page AI.
This is in New York?
In New York. And we have 20 outstanding Memorial Sloan Kettering pathologists. We have as well a dozen or so brilliant machine learning people from Stanford and MIT. The difficulties of working across barriers is not to be underestimated. Mm-hmm. But that is why Page AI, or there's a company in the Bay Area, Tsinghua graduates and Stanford graduates called Subtle Medical, that is reinventing radiology in many ways. And it's a combination, again, an interdisciplinary combination of great academic institutions, Stanford, Harvard, MIT, Cambridge, Oxford, Tsinghua. Academic centers are more important than ever, and the talent that joins also needs to understand they're dealing with domain experts in medicine that wouldn't ordinarily understand how to build fast-scaling, incredibly high-growth, internet-oriented companies. And it's that intersection where I think many of the very best opportunities are, whether it's in Beijing, Guangzhou, or Silicon Valley.
You're getting toward exactly the question that I want to ask, Jim. But first, Hugo, can you tell us one company that you're invested in that fits this bill?
Well, I just mentioned SenseTime,
yes,
who was just here. Of course, Jim, actually, I want to clarify, when Jim we met, at that time he's the managing partner of Excel Partners.
Yes.
And then we actually set up the IDG Breyer Capital, Growth Fund and the Capital Fund. And then, of course, Jim runs the Breyer Capital. And then, but we're always as a partner working together.
Yes.
So we jointly invested in this SenseTime company. The founder graduated from the best technology school, the China University of Science Technology in China, and also got the degree in MIT. And Mr. Tang, great entrepreneur and a great scientist. But then we got, like the opportunity, and we invested the Series A financing, a $200 million valuation. But now it's Masayoshi-san invested, $1 billion, the company for like.
You've heard of him, yeah.
Yes, the Vision Fund invested.
Yes.
Now we got the $6 billion valuation within 4 years.
The question, Jim, I want to ask you is the Facebook was, we called it an internet company. Today we might call it a media company. Every company is an internet company. Is the two companies you mentioned, I understand why multidisciplinary artificial intelligence is important, but those sound like medical services companies to me.
No,
so go ahead and tell me why.
Absolutely not. And going back to Facebook, it's fascinating. I invested at 5 cents a share in April of 2005.
5 cents a share relative to today's price?
Today's price, with a split. So,
okay.
And part of what our bets are is when category-defining companies can't be pigeonholed. And Facebook, for the first several years, Mark would say we're a technology company, but then a lot of the media executives, particularly after Sheryl joined in 2008, felt it was a media company. And for a lot of the AI healthcare medicine companies, they can't be defined as AI technology or medical. It's a combination that's going to be required. And it's a little bit like some of the academic centers where I'm involved. I'm a board member of Harvard University, the Stanford Engineering School of Computer Science, and now they have a Human Applied Intelligence Initiative. And we're at a point where the distinctions are blurring. If you're a great brain surgeon, you need to find the chemists and the computer science PhDs who are best in world if you're trying to reinvent brain science or neurosurgery. And that's what I'm seeing. The best academic schools in the world are still the centers of so much of this talent. And that's why I'm still very optimistic, whether it's Beijing, Guangzhou, Palo Alto. These are the centers where these alumni and great academics are working on changing the world in many positive ways.
Let's talk about China. Hugo, you've said recently that there's too much capital in China. Could you explain what you mean by that? Other than wanting less competition, I understand that.
Okay, not now. I think, but you got to realize over the past 3 years, China, 23,000 venture capital firms and PE firms got established.
Yeah, but there's 1.3 billion people. It's probably not that big a ratio, right?
That number actually 6 times more than the U.S.
Okay.
And then that's because the government and encourage the entrepreneurship, create the new jobs. A lot of local, incubators and the so-called government guidance fund established, support all these companies. But I see the challenge is really they need better strategy on the also more focused strategy and more experienced firms, particularly fund to help for scale. That's why I think that's one of the challenge.
May I add a point? Hugo and I have traveled together to 17 provinces in China. And very often, whether it's at Tsinghua or in the West, Chengdu, we are asked, what's the difference between Chinese entrepreneurs and Silicon Valley entrepreneurs? And it's endless reflection, and we're always learning. But in several cases, the Chinese entrepreneurs we met with, including in Hangzhou, went to a temple with us. We walked up, and then we were asked, what are we hoping for and praying for? And the Chinese entrepreneur who was with us, who's been very successful, said, I'm praying for an IPO. That does not happen in Silicon Valley. And so there are distinct differences. It's endless learning. But we smiled, we laughed, and that's part of the wonderful fabric of entrepreneurship and venture capital and trying to get it right. Local really matters, but scale really matters, and there are endless stories like that together where IDG and Breyer Capital have met with entrepreneurs, and we come out saying, this is very different here at Tsinghua than it would be at Stanford University.
No, I want to understand what you're saying, because I think you're politely using the word different. Are the Chinese entrepreneurs right now better? Or do they represent a better opportunity for this reason that they're praying at temples for an IPO, and their counterparts in Palo Alto are doing what instead?
They're trying to build great product, although they're also thinking not about an IPO or necessarily how to sell the company, but I recommend, and of course Bill Gates mentioned this last week, and we've laughed about it, watching the Silicon Valley HBO show really is absolutely a wonderful way to learn about Silicon Valley, and somebody should do the Silicon Valley version of what Chinese entrepreneurship looks like. In short, many of the best entrepreneurs in the world, whether it's Pony Ma or Jack Ma or the team Jack has built now at Alibaba, are as good as anyone in the world. and Jeff Bezos and Mark Zuckerberg and Steve Jobs in the past, Larry Ellison, they are geniuses. And so one has to understand that sometimes Steve Jobs doesn't only represent, and he was a personal friend, 1 out of 7 billion. He's 1 out of 7 billion every 2 or 3 generations.
Yep.
And that's part of what we're always trying to find, whether it's in China, Silicon Valley, Cambridge, Massachusetts. We're not always going to get it right, but it's that combination of brilliance, IQ, passion, tenacity, and understanding how to build and scale talent.
But if you had to choose one or the other, are you more enthusiastic about China innovation or Silicon Valley innovation?
My bet is of the 18 companies, 10 years from now, out of the top 20 companies in the world in market cap, 18 of the 20 will be in both, and I think that very likely, call it 10 will be in the US and 8 will be in China.
Okay, so that's you're
And that's how my dollar investing works as well.
Hugo, you think that's right?
I may just, really very agree, but then I would say maybe 10 out of China, 8 in the Silicon.
Oh, these are fighting words.
Only difference.
These are fighting words.
I don't think it's that controversial at all that the American champion went slightly more with the American and the China champion went slightly more.
But I want to add one more thing, because working with Jim really very enjoyable, because Jim really very sensitive to the cultural difference, because each China is not only one Silicon Valley.
Yes.
Because we travel to different places and different culture even.
Yes.
So like Shenzhen, those areas, Shenzhen, Guangzhou, they're very different from the entrepreneurs in Hangzhou, where Alibaba is based, and then also some other places. That's why we actually choose those areas. One, they have very good universities. They can train very good, particularly very good engineering schools. So IDG, Jim also is our partner. We have an office in Beijing, Shanghai, Guangzhou, Hangzhou, and we're going to add a few more in other cities. I think it's very, very exciting.
Very exciting. Now, I want to try to provoke the two of you before we finish. You mentioned Hugo Masayoshi Son a few minutes ago.
Vision, yeah.
He's investing, $100 billion. Alibaba, Tencent, Baidu are making huge investments in venture capital. So now, forgive me, we're role playing here.
Okay.
IDG Capital, Breyer Capital, they don't even matter compared to that kind of money.
Okay.
Tell me why I'm wrong.
Okay, very good question. Let me go back to the history and talk about China. The company made a lot of money in China is Naspers, right? So the US.
Naspers, the South African media company.
Yeah. That they came to invest in Tencent, Series B, invested like $32 million.
Yeah, one of the greatest investments of all.
Yeah, about almost 3,000 times the return. And the other one is Masayoshi invested total 2 rounds and $100 million in Alibaba, right? Got about almost 1,000 times the return. But that time, and of course, Yahoo's Jerry invested like $1 billion in Alibaba in the Series D, and actually they got maybe 60 times the return. But that time they all publicly traded the company, and that we actually see the opportunity. We're not stupid, but with the venture capital, we're not have that kind of money to invest. And then, therefore, I think that nowadays, those kind of companies' place was replaced by BAT, and all those kind of public traded companies. But to them, we're actually working. Quite honestly, we compete, of course, and also we tend to be better than them to get fund opportunity earlier.
Yes.
And then later on, actually, we have something we can co-invest together. For example, we're grateful to Martha, right? With the Vision Fund, we got a nice valuation increase, right? So,
I'm sorry, with what company? with SenseTime, yeah.
That's right. So I think we think
understand.
this, in the US, is the same thing because, you know, you have Microsoft, the venture capital, Intel capital, et cetera. But then, yes, we compete for, you know, opportunities, the valuation, but a lot of times we actually have some cooperation. Maybe Jim can add.
I'll offer very quickly.
Yeah.
It's returns, returns, returns.
That's right.
And our job as venture capitalists is to always be thinking about how to generate excellent, extraordinary long-term returns, and we are measured by our returns. And I'm on the board of, I believe, one of the best private equity financial firms in the world, Blackstone. It's the same idea. Jonathan Gray, our leader, who reports to Steve, who has scaled real estate investing, we start every meeting with, here are the absolute relative returns. And venture capital is like that as well. We are measured by our returns, and our returns are defined by, can I get Larry Page or Mark Zuckerberg or Jeff Bezos to take a look at a startup? And if I can't do that within 24 hours, Mark Benioff, Larry Ellison, I'm not doing my job. And that's what we ask the entrepreneurs in China and around the world to reflect upon. That's our job.
Are you saying that Breyer Capital and IDG Capital will have better returns than the Vision Fund?
Yes.
Excellent. I thought you were gonna, I didn't think you would answer in one word. Your questions, please. Yes, Mr. Leaf.
Yes. Hi, how are you? So healthcare is famous for its legacy problems, the lack of interoperability, the huge guild membership issues, the fact that it's heavily regulated. Do you think your AI companies are going to be able to leapfrog that? Are they somehow immune from these problems? What makes them special?
In healthcare in particular, is that your question?
AI, yeah.
The
For Jim
business
and
models
Hugo,
are,
thanks.
thank you. No, the business models are extremely challenging. And so in many of the AI healthcare companies, there will need to be partnerships, whether it's with Kaiser or medical institutions, but you're absolutely right. The historical model of healthcare technology solutions has been broken. We have monopolies in terms of electronic medical records. So it's unclear how the models will take hold, but I would also offer when it was Google early on or Facebook early on or so many different companies, the business models often are unclear. But in healthcare right now with the AI healthcare, I don't know of anyone who understands what the business model yet will play out as, but the technologies are so profound that if you are Harvard Medical School or Mass General, you have to be thinking about how these technologies are going to assist physicians and patients.
And
Please, Hugo, yeah.
I would like to add one more thing, and I think maybe the big opportunity will be helpful to the AI will be the 5G, the technology when they're applied, because that may change a lot, make a lot of changes in the medical healthcare services.
And I want to point out to you that when Jim talks about an exciting industry that doesn't necessarily have a business model yet,
Yeah.
that people used to snicker about that. They don't snicker anymore with some of the companies you've invested in that didn't immediately have a business model. Why are you interested in blockchain, and what are you interested in?
Well, we very interested in the blockchain technology. And then Jim, IDG Capital, we invest in great companies like Circle, et cetera. And then we think that blockchain technology will really actually have big impact to make the changes. I think this is pretty much a disruptive technology, make a lot of changes to the landscape, what we are familiar with.
So we are
interested in.
Absolutely. We're close to a nuclear winter right now in many of the cryptocurrencies.
Yeah.
Why am I excited? Because when I sit with the very best PhD students at Tsinghua and Stanford and MIT, so many of the very best computer science, deep learning PhD students and postdocs are working on blockchain because they have so much fundamental interest in what blockchain can mean whether it's patient records, medical records, different financial service segments. And I've learned that when you get the very best of the best, women and male computer scientists who have spent time at Google and Facebook and Amazon working on something like underlying cryptography and cryptocurrency technologies, you don't want to bet against the best and brightest in the world.
Jim, I totally get it. And it's fascinating the way you, it's almost, it's a leap of faith, but an educated leap of faith. Why are we in a nuclear winter then?
We were in a nuclear winter when I was investing in internet companies. Starting in 1995, 99 to 2002 was not so much fun. Didn't have to go to board meetings. I could just call in and say, please lay off another 10%. These cycles keep happening every decade or so, and social networking went through a nuclear winter. AI, for many years, didn't have either the elements of computer vision that Fei-Fei Li and other great professors have developed. And so this is inevitable. There's a hype, but one never wants to believe the hype as an investor. But I also, as I said to Alan last night at dinner, you don't always want to be on the negative side. And so it's that combination. I would never hold a stock for 20 years and just say I'm blindly holding the stock. I would also not go into a new investment and say the goal is in 2 years sell it to Google or Facebook or Tencent and move on. And so it's that balance that we're always trying to get right if we're going to be superb long-term investors.
So very thoughtful. We have very briefly, right now, between China and the United States, there are two internets. And you have invested successfully in both of them. Will that situation persist for a long time? For these 10 years, 10, 20 years that Jim talks about, will we continue to have two internets?
To internet?
Yeah, the Chinese internet and the Western internet.
Currently, yes, but then of course we'll see how they can merge. But then I can see maybe in the AI and then B2B area, maybe it's easier to have maybe mutual platform for the consumer internet, but then still, different company working on the different games. Like, for example, Facebook and Google, they're not in China yet. But then the Chinese companies not do much of the business in the US
Jim,
as well.
very briefly, if you would.
I'm on the board of advisors of Tsinghua, where I'm chairman, and involved with Stanford and Harvard very closely. There is superb technical talent trying to figure out how these internets over 3 to 5 years will be similar. And so forgetting the political storm, the fundamental technologies of a worldwide common set of open source platforms with very significant cloud-enabled applications will, to me, suggest that 3 to 5 years from now, there will be a worldwide internet, US, China, where there are going to be very significant open opportunities for entrepreneurs, whether they're at Tsinghua or Stanford University.
Gentlemen, you two are great partners. Thank you for being with us so much.
Okay, thank you.
Thank you.